On today's episode, we're going to be talking all about first-time buyers who'd like to purchase a property using a 5% deposit. Hello, welcome back to our channel and podcast. My name is Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us. And for those of you who don't know Ifti is a trained accountant and mortgage advisor who has been working in the industry for over 11 years. He is also one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
Hi, I'm very well, thank you. How are you, Gemma?
I'm very good, thank you. So today we are talking all about first-time buyers, and if you are a first-time buyer watching this video, you might be wondering, where do I start? It's quite overwhelming. Well, here at WS, we think the best place to start is always with a broker who can help guide you. They can also help figure out your affordability, which is so important when looking for that first property. That will help you plan and budget. So let's just talk a little bit more about the affordability process. Why is that important for first-time buyers, Ifti?
Yeah, I think that's the starting point for a lot of people, because obviously, there are houses which might range from, £40,000 to a few £1,000,000, right? So you just need to know which house you can afford, right? You at least need to know a maximum what you can afford. So that really will decide the house you can buy. For a lot of people, first-time buyers especially, that number is so important. Because most of the first-time buyers have just started off in life, right? The ones I've dealt with, they've just started earning money. They can be in a partnership, might have just got married. So for people like that, that is so important because most of them will stretch to the maximum. As you know, house prices in the UK are quite high. It's gone up in the last couple of years quite a lot. So for people like that, the first step in the property ladder is what most of them are after. So you need to know how much you should be able to afford so that you can confidently go and look at the properties and say, okay, yeah, I like this property. I can make an offer because I know I can afford the mortgage. So that's why that affordability is very, very important for first-time buyers.
And so what role does the deposit play in this sort of piecing together of how much you can afford?
Yeah, I think deposit these days play a big part. I think it has always played a big part. If you look at mortgages out there, deposits can range from 5% to 50, 60, 70%, right? But if you're talking about first-time buyers, quite often, most of the time, people are at that lower spectrum where they have smaller percentage of deposit. So it could be a 5 or a 10, maybe 15 if you're lucky. So that's where most people start, right? Now, the problem you have with that kind of smaller deposit is you will always be looked at as a high-risk customer for a bank because you have the smallest deposit. The banks know that if somebody has a 50% deposit, they are unlikely to run away because they own 50% of the house, right? But whereas if there's somebody with a 5% deposit, bank is taking a bigger risk, right? So, and chances of you running away compared to a person with a 50% deposit is much, much more. So therefore, bank will be extra cautious with that deposit. Sometimes in our videos, you'll see, we talk about income multiples, right?
Yeah.
We say some banks offer you 4.5 times your income. So that number, with some of the banks, if you have a smaller deposit, that number will come down. The income multiple will be low. So I have seen where banks, when you have a 25% deposit, that income multiple goes from about 4.5% to 4.75%. Some banks do that. So the deposit will play a big part, and also your credit score. Usually what we find is people with a smaller deposit require a better credit score. So they will look at it that way as well, right? So not only in terms of the income multiples, but they will also look at the credit score. Because if the credit score is slightly lower, then sometimes banks say, actually, you can't do a 5% deposit. As an alternative, we can offer you with a 10% or a 15% deposit. So that could happen as well if you have a smaller deposit. So it does play a big part for sure.
All right, thanks, Ifti. Now let's get into some of the different kind of options now that you might have if you had a 5% deposit. Let's start with the Help to Buy scheme.
Yeah.
That is a good way to sort of boost how much you can borrow.
Oh, definitely. Help to Buy has always been a very popular scheme among our clients. I think overall it's the same as well. Just be very mindful. Help to Buy runs out in the next few months. I think we got probably about 9 months to go from now by the time this video has been shot. So it's not very long to go for the Help to Buy scheme to end. There may be an alternative to that, but as of now, we do not know whether there is an alternative or not, right? So with Help to Buy, what usually happens is you have to put a 5% deposit, 5% or more, right? You can even put 10 if you want, but the government gives you 20% as an equity loan. So they do give you part of the deposit as well. So if you put down 5% and the government puts down 20%, automatically your deposit becomes 25%. So you only need to borrow 75% from the bank, right? Obviously, that gives you a massive boost. So it is definitely helpful. That's why it's been very, very popular among our clients and so many others who got into the property ladder. Help to Buy has always been one of those schemes that has been helpful.
Yeah, definitely. And if you guys want to know more information about that, I will link our Help to Buy video in this one so that you can watch in more detail about Help to Buy.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
The second option we've got for you guys today, if you have a 5% deposit, is the shared ownership scheme. That's another way, isn't it, if you can get onto the property ladder if you've only got 5% deposit?
Oh, definitely, yeah. So shared ownership, in many ways, it's like Help to Buy, but it's not exactly Help to Buy. Usually shared ownership is done with the housing association. Let's take an example, house is worth 100,000. What usually happens is they'll say, you can own maybe 25% of the house, right? So you get a mortgage on that 25%, right? So that's what happens with these schemes. And the balance 75% is owned by the housing association, right? So again, it helps you get into the property ladder. I have seen nice success stories behind this as well, but it definitely helps, right? So because you're buying a share of the house and you need a mortgage for that share of the house, right? So,
and then you rent the other
works very
section,
well
don't you? You rent the
Exactly. That's right. So you pay rent to the housing association for occupying their part, right? So for your part, you pay a mortgage to the bank, right? Mortgage with interest, you pay to the bank, but for that part. But again, for people who are looking at that first step, right? This could be very helpful.
Okay, another way for some of us might be the bank of mum and dad. How can the bank of mum and dad help us, Sifty?
Well, for a lot of them, it is a bank of mum and dad, right? So obviously, especially when you're just starting off, parents like to help out children. That's a very common thing. Parents can say, yes, I'm happy to give 5,000, 10,000 pounds as a deposit. So that could help your deposit, right? So if you have 5%, it could go up to 10% with mom and dad's money. If you have 0%, that might be your 5%, right? So it's always helpful, but be mindful. There are some documentation you need from your parents. They can't just transfer the money and say, here you go and buy your house, right? It doesn't work that way. Speak to a advisor and get some guidance. Each bank has slightly different rules around this. The common one is it has to be purely a gift from the parents. It cannot be a loan, right? So the parents can't give you money and say, give me back in 1 year's time or 5 years' time or whatever it is. That doesn't work. It has to be purely a gift from them. Usually they want something called a gifted deposit letter. Again, I think we've done a video on that before. But if you need help with those formats and things like that, we can help you. Again, these formats can vary from bank to bank. They often need audit proof of how your parents have built up this money, because parents can borrow the money and give it to you, right? Bank doesn't like it. So you just need to be very careful with that kind of documentation as well. So it's always best to get some guidance on these things because, like I said, each bank has different rules, and so long as you comply with it, you're fine, right? So, but it is a fantastic route. A lot of people sort of get into the property ladder using their parents' money. So, yeah.
And another way you can kind of get onto the property ladder with a 5% deposit, if you need to stretch it a little bit, is also joint borrower sole proprietor. How can that help first-time buyers, Ifti?
That's a scheme which is getting very popular. As of late, we have done a lot of mortgage applications that way. This mainly helps with people like these first-time buyers who's trying to buy the property for the first time, or university students as well, right? Because I find a lot of parents coming and say, look, my son, daughter going to university, I don't want them to pay rent. I'm very happy to get into a mortgage and, sign off like a guarantor, right? So, this is kind of an alternative to a guarantee scheme. In the past, there were guarantee schemes, right, where parents sign as guarantors in case the children default, right? But this scheme is the more popular one now because I can see that the guarantee scheme is kind of dying down. but this has really picked up over the last few years. So what effectively happens is you and your parents together, you will buy the property. The mortgage will be on your names, right? But the house, the deed will be on the child's name, right? So assuming it's joint borrower, sole proprietor in the child's name, right? So the child will own the property. So the child's name is the one that will go in the land registry. But for mortgage purposes, both of you are on the mortgage, right? So obviously parents probably have better income than the child. That's why they get involved. Sometimes the child doesn't even have income, right? So because they're going to university, right? So together they buy the property. Banks are more than happy to look at mortgages like that because both are liable for the mortgage. And I'm sure, the parents won't just sign up unless they are uncomfortable with it, right? There will be some evaluation on the parents as well as the child, and then it kind of works, right? So it's a fantastic scheme. But do tell your parents if they're trying to help you out. There's no stamp duty implication because obviously the property is going to be on your name, right? There are some other tax benefits with this joint borrower sole proprietor scheme. I think that's for another conversation. But again, if somebody is interested in this area, I'm more than happy to talk about the tax benefits as well. Obviously,
put your accountant hat
I'm
on.
an accountant. Yeah, that's right. So but it's another conversation.
All right, well, the last one we have today is kind of more straightforward. It's just the regular 95% mortgage products that most lenders have available. That's also another option, isn't it?
Yeah, that's right. So you got the 5% schemes that lenders offer. It's 95%. Also, remember there is this government-backed 5% scheme as well, right?
Yeah.
Not all lenders have signed up to that, but some lenders have signed up to that, right? So what happens with that scheme is the government guarantees about 20% of the property value.
Yeah.
So the idea behind this when they introduced was if the property values fell, not a problem. Government is there to sign off as a guarantor sort of thing, right? So a lot of banks signed up to this scheme. Some of the banks didn't, but they offered 5% deposit mortgages, right?
Yeah.
So that's again quite popular. Be very careful with 5% mortgages. As I mentioned earlier, they are quite strict with your credit evaluation because that's the mortgage that the bank generally takes the highest risk on because there isn't a 4% or a 2% mortgage, right? 5% is the starting point. So that is the highest risk for the bank. So they will look at you a little bit more carefully. So if you're looking at 5% deposit mortgages, make sure your credit file is spotless, right? It's clean. If you want, again, you can speak to an advisor or you can speak to us. Go through your credit file with us. We can point you in the right direction if there's something that needs looking at, right? Because there are small things in your credit file sometimes can be clean. Like you're not on the voters register. You might not know that, but that does change your credit score, right? Yeah. So if you speak to an advisor, they will know about it and they can guide you on this.
Thanks, Ifti. Do you have any other points you wanted to talk about today for our first-time buyers?
Yeah, I mean, obviously there are schemes out there, right? We did cover some of the most popular ones, but there are schemes out there. And, if you ask advisors like us, sometimes we can tell you to look at your credit file, right? How to improve your credit file. Because all these things matter. And also, we can sometimes give you tips on how to save money towards the mortgage, because obviously that requires a little bit of discipline as well. So we might be able to guide you on those things. So if you are thinking of buying a property, don't wait till you have that 5% as a deposit to come and speak to an advisor.
Yeah.
Start that process early on, right? Because it could be faster than what you think, right?
Yeah.
If you do get the right guidance, right? So we might be able to work it out that way. Of course, there are schemes like the LISA scheme, the lifetime ISA schemes. So those things, sometimes there are contributions from the government as well, right? So a lot of people do not know that, right? But when you speak to brokers, I mean, there are people who come and tell me, I'm glad I spoke to you because I didn't know that there were schemes like this. So, it's always best to have that conversation earlier on.
Yeah. And also there's a lot of new schemes that have popped up, sort of private lenders offering, extra deposit size and things on properties. So also I would say if you're going to consider one of those schemes, a couple of people have sent them to me and I've had a look at them, and it's worth talking to a broker about them because, just comparing them against the products that already exist, because I mean, I don't know if you've noticed, but I've noticed that some of the rates are quite high and there's other options that will work out cheaper. So it's always worth talking to somebody, a broker, not necessarily us, but just a broker who kind of has knowledge in this area and that can help you on your way.
Yeah, it's always good to get some advice, especially if you don't have that guidance, right? Because sometimes there are people who, whose parents or close friends know what to do, but majority of the people I speak to, they don't know. But of course, sometimes parents and friends they might not be qualified, right? They sometimes only share their experience, but the brokers would have seen thousands of clients, right? So they can share all that experience with you. So it can make a difference, yes.
Definitely. Well, thank you, Ifti, for joining us again today, giving us some more great advice. I just wanted to put a reminder out there that these points may or may not be applicable to everybody, so please do check with an advisor if they're suitable for you. And if you don't have an advisor, I will leave our WS contact details down below, as we're always more than happy to help. Another little reminder that as your mortgage is secured against your home or property, it might be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.